You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer.
Hi there, it's Victor here again from foreshowmarkets.com. In today's video, we'll be looking at triangles. Okay, we'll be looking at triangles. What are triangles in technical analysis? All right. There are three basic types of triangles. You have the ascending triangle, you have the descending triangle, and you have the symmetrical triangle. Okay. Triangles basically are continuation patterns. Okay. Fundamentally, they are continuation patterns, but when they fail, they can serve as major reversal patterns. Okay, so let's take a look at what we mean by what I just said. Okay, let's look at the ascending triangle. As you can see here, this is the triangle. Okay, this is the triangle as it's ascending, but what you can see here is that the top of that triangle is flat. Okay, the price action there is on the same level. Okay, unlike the falling wedge and the rising wedge. Okay, this has one side is flat. Okay, and so before the triangle formed, you saw that you have an initial. From here we are already in an uptrend. Okay, so initially you are expecting a continuation, as triangles basically are continuation patterns. Okay, so if it breaks up to the upside, then it continues. You could have your entry above the resistance here, right? Your stop loss can be below the previous support, and then your take profit anywhere above there, maybe 2 times of your stop loss. Okay, but let's look at a typical example of how this works. So you have already an uptrend. Let me see, to draw a triangle. I don't need to do this way. So first of all, we have, let's just assume that an uptrend formed. Okay, and then you start seeing this kind of pattern. Price keeps going to that resistance. It keeps doing higher lows, but never breaks above there. Once you see this, okay, it keeps doing higher lows, but it never does a higher high. Once you see this forming, you can see that you are forming a triangle, and it is ascending. That's why it's called an ascending triangle. Okay, ideally your ascending triangle is a continuation pattern, giving you the hint that once the price breaks above that resistance there, where it's going to be a big move to the upside. Okay, so you're buying above there, your stop loss above here, and then you take profit 2 times, 3 times, 4 times of your stop loss. Okay, but an ascending triangle will not always continue the trend, and so sometimes your ascending triangle, or many times your ascending triangle, will fail, because of course the big players in the market will want to deceive you. Okay, so you can see something like this. Price breaks below there. Okay, so once price breaks below the lower trend line, ascending trend line, okay, ascending trend line, and the support, okay, at this point, once the continuation move fails, then every likelihood that this is going to form a big reversal pattern. Okay, so an ascending triangle is a continuation pattern, but when it fails, it most likely becomes a major reversal pattern. Okay, so it also means that when it fails, you can sell below this support line here, below that support, and then put your stop loss above there, and then your take profit, of course, should be much lower. Okay, so that's how your ascending triangle works. It is a continuation pattern, but when it fails, it could serve as a major reversal pattern. Okay, same applies for your descending triangle. Okay, so we're already in a downtrend, and you start seeing price goes up, correction, it comes down, it fails to break that support, it comes up, does a higher low, comes down, fails to break the support, goes up, does a higher low again. At that point, your mind should already start telling you that this is a descending triangle, okay, and a possible continuation is about to happen here. Okay, so once price breaks below this support, the idea is to sell, put your stop loss above that resistance there, okay, and expect a big continuation down. So ideally, a descending triangle is indicating a continuation to the downside, but if it fails to the upside, then it is giving us a hint that there's a possible reversal pattern, and so we have a buy there. Your stop loss below, in the case of where it fails, your stop loss below the support, and then your take profit anywhere above there. Okay, that is for a descending triangle. And then you also have the symmetrical triangle. Okay, the symmetrical triangle forms it can form in an uptrend. So let's say this is an uptrend, and then you start seeing something like this. Symmetrical, it's not ascending, it's not descending. So it keeps doing higher lows and lower highs. Okay, higher lows and lower highs, higher lows and lower highs, higher lows, so that it's such that a form, you can see it's rising there, it's falling there. So that is what you call a symmetrical triangle. Okay, a symmetrical triangle. It is almost similar to a falling wedge. Okay, that's a symmetrical triangle. You get it in an uptrend. You can also get it in a downtrend, and you get something like this: higher low, lower high, higher low, lower high, higher low, lower high. Okay, and it forms a symmetrical triangle like this. Okay, so it can either break, it can break to the upside for continuation, it can break to the downside for reversal. This can break to the downside for continuation, it can break to the upside for reversal. Okay, so basically that is how your triangle work. And so your triangles can serve as both continuation patterns and reversal patterns when the initial move fails. Okay, so that's all about your triangles. If you've learned something in this video, give us a thumbs up. If this is your first time watching any of our videos, make sure to subscribe by clicking the subscribe button below the video, and then click the bell to the right of the subscribe button so you get notified whenever we're uploading a new video. Okay, I want you to understand that all of this, we're just teaching you theoretical concepts, you know, and so when we're done with the basic training, all we're going to be doing, most of what we're going to be doing, we're going to be looking at charts, practical charts, real life market charts, and so you can see how you can capitalize on these moves. Okay, it's absolutely going to be amazing. We're going to have so much fun in the market. All right, so I'll see you in the next video. Have a wonderful day. Cheers.